What's going on, guys? It's Kyle. Welcome to the Stock Goat YouTube channel. We're covering the SoFi stock once again because they posted a massive profitable quarter of $48 million and guided higher than analyst expectations of 5 to 6 cents EPS and raised to 7 to 8 cents EPS, and also a longer term target of 2026 EPS of 55 to 80 cents. This is a money printing machine that has just started. The stock is significantly undervalued when you talk about growth because no other bank in America is coming anywhere close to that type of growth. They're also doing these types of numbers at the exact same time, scaling new members, 600 to 800,000 members per quarter. If you find any of this information useful, be sure to subscribe to the channel. We're going to be covering all the breaking news. Don't forget to smash the like button and drop a comment. I'm going to be keeping you guys updated daily. We're going to be looking at the SoFi CEO live on Cnbc. I literally have not seen this video, so I'm going to be doing a little analysis at the end of the video. Let's get into it.
Shares popping double digits on those strong results, almost up 23% right now. CEO Anthony Noto joins us. Anthony, thanks for being here. Big quarter for you all. Profitable one, record revenue across the three businesses. Solid profitable outlook as well. What are some of the key drivers that you think led to these results?
Well, Leslie, thank you for having me on. I'd say the strategy overall has really come into play and delivered exceptional results for the quarter. 6 years ago, we embarked on this very ambitious strategy to be a one-stop shop for all your financial services needs. When I joined the company in February 2018, we were primarily just a lender in two products. Today, we offer not just four types of loans, including home loans, but we also offer SoFi Money, which is a modern checking and savings account, SoFi Invest, SoFi credit card, insurance products, and we also power 140 million accounts across the fintech industry through our technology platform that we outsource to our partners. This quarter really reflects the fact that the financial services segment is now profitable and growing quite meaningfully. The tech platform business is also profitable with accelerating growth, and that's really the drivers of growth going in 2024 and less of the lending pieces. So it was a combination of that strategy over the last 6 years being invested in and then coming to fruition in 2023 with record revenue of over $2 billion and record EBITDA and actually hitting our long-term EBITDA margins at 30%. And as you mentioned, GAAP profitability for the first time, which will sustain in 2024.
Yeah, and of course, this all comes against a macroeconomic backdrop that for a lot of lenders remains uncertain. And you have a pretty conservative outlook for 2024, baking in a 5% unemployment rate, 4 rate cuts, which is, of course, fewer than the market is pricing in. So what are you seeing in terms of customer spending trends, portfolio quality that is helping to inform your outlook for 2024?
Yeah, as you mentioned, we did take a very conservative view on the lending part of the business for 24. We are expecting 75% year-over-year revenue growth in our financial services segment and 20% year-over-year revenue growth in a tech platform, and really no growth in lending because of that conservative view that we're taking. We do expect credit to normalize. We're seeing those trends across the industry as well as at SoFi, and so we're taking a very cautious view there. In terms of underlying spending trends within SoFi Money, we had $1.6 billion of point-of-sale debit spending in the quarter. That's annualized at about $6 billion. It's up 3x from a year ago. We're seeing strength within existing accounts, but we're also adding new accounts, so it could be a little bit misleading. In addition to that, we have been observers of the broader market dynamics. We've seen some levels of liquidity dry up in certain markets. In addition to that, the largest banks have seen an increase relative to 7 and 10-year highs in write-offs, delinquencies, and then the provisions for losses of one of the largest banks were up 50% sequentially. So we're really bullish about our financial services segment, which is growing quite well, 75% for next year, and tech platform, but conservative on the lending side.
Hey, Anthony, some of the macro stuff that got commentary in the earnings last week was about real wage growth rising again after 2 years of shrinking. Is that starting to make itself felt within the metrics?
We're not actually seeing an impact on spending. We are obviously seeing a normalization of credit back to pre-COVID levels. So that's where it's showing up on the spending side. That is still strong, but the credit side across the industry as well as at SoFi is definitely normalizing, which is why we're taking a conservative view. The unique thing for SoFi is that in 24, 50% of our revenue will be from technology platform revenue and financial services, and 50% from lending. In previous years, it was as high as 80%. So we've gained scale and profitability in those two segments just in the right time as we enter 2024 and the concerns on the credit side.
Guys, that was an awesome interview. CEO Anthony Noto said just a couple of years ago, SoFi was at 80% lending. That is where the bears can just target us as high risk, high risk, high risk. We are dropping that from 80% down to 50%. We have diversification in our businesses now because every business is profitable because they have scaled all the businesses. All of those losses you had to suffer the past couple of years, it will come with a reward. And that reward is 2026 EPS of 55 to 80 cents because this company can drop massive amounts of dollars to the bottom line while growing users 800,000, 600,000 every single quarter, guys. No other bank, fintech is going to get that in the United States right now. I'm telling you, they are going for number one and they are going to start jamming up these top 10 legacy banks very soon. They know it's coming. Deposits are going into SoFi's hands. They just dropped off their debt by $1 billion, getting out of those personal loan warehouse facilities because they have the dollars from those deposits coming in. It's going to give them a lower cost of funding, so they're going to see more profitability. You just seen that on the numbers. They're seeing 75% financial services growth for 2024 and 20% Galileo technology growth for 2024 and lending flat. Hey, I don't care. No one's going to give us a premium for lending if we lend well. It's just going to give us some nice profit dollars to hold on to, but you're not going to get premiums just being a bank 100% lending. This is where the bears like to target us. They like to target us on lending, higher risk, credit defaults, and stuff like that. We need to get out of lending. We are doing that. And of course, the longer term goal SoFi has is a 33% split between financial services, lending, and also Galileo Tech Platform. This is an amazing interview, guys. I'm very excited for where the company is headed. If you find any of this information useful, be sure to subscribe to the channel. We're going to be keeping you updated daily. Don't forget to smash the like button. Don't forget to drop a comment. I'm going to be coming back to as many people as I can. Once again, my name is Kyle. Have a great day.